Hello YouTube, we are back. We are the Serious Brothers. I am Philip Serious. This is my brother Andrew Serious, and today we are going to talk about what a lot of people in California want to talk about, which is out-of-state investing. Now, a lot of people want to talk about this, but those are some of the more common.
A lot of people on the coasts or in expensive markets, which makes sense. And I think that's really, if you are considering out-of-state investing, the first question to ask is, are you sure you want to do that?
Yeah.
And it can work. I've seen it work, but I've also seen it crash and burn and fail spectacularly. And I mean, like spectacularly, like
a lot of times.
Like foreclosures when the market was going up in like 2013, 2014, catastrophe. But I've also seen it work. So I think the first question to ask is just, can you do it in your backyard? Like if you're in the middle of San Francisco or New York, I remember seeing people from Sydney coming here, where we're at in Kansas City, to invest and buy houses and whatnot. I get it. The prices there are ridiculous. There's a lot of rent control in a lot of these markets. It's not going to work. But if there is a place nearby that you can invest in, generally speaking, if you can go there, even if you're hiring a property management company, that makes a lot more sense.
And figure out what your goals are. I mean, this is going to matter depending on everybody's own personal desires, personal goals, personal situation. If you're looking for cash flow, that's the number one thing you want. Some markets are going to be really hard, especially if you're trying to leverage and get cash flow. If you just want cash flow and you want a place to park cash, you can put a lot of cash and still get some cash flow out of it if you're not leveraging your properties. If you're looking for appreciation, you don't care about the cash flow, some of the more expensive markets might be great.
Yeah, and also if you're buy and hold, I wouldn't recommend flipping out of state. That's
I don't know why you would try to do that either.
Especially since flipping can be very lucrative in markets that don't cash flow well, which is usually the reason to think about out-of-state investing. If you are going to invest out of state, there are several critical things you need to look for. You need to evaluate the you need to evaluate the property itself. You need to evaluate the area, and you need to evaluate the team. And we'll start with the team. I think we'll start with the property, which is basically just standard due diligence, except for I would say, especially in the early going, especially before you have a team vetted, you need to do that yourself.
Yeah.
Like, you need to get on that plane, and you need to fly out there. I would not recommend hiring a real estate agent or a turnkey company. Some of them are great, some of them not so much. I've seen some big shysters, turnkey companies, buy houses, fix them up, sell them to usually out-of-state investors, and then manage them for them. Some of those are good, and we know some people who run them, and they're great. Some of them are where those foreclosures I mentioned came from, just awful operators, which is what you need to check here. But early on, I would always come out and view the property yourself, go through due diligence as you would at a house in your own area, video on doing due diligence on houses. But I would always recommend, even the second, third, fourth, it would be very, very tough for me to get to the point where I'd accept somebody doing my due diligence for me on an out-of-state property.
Well, and that comes to the next part of your team and figuring out the team, because, I mean, you need to vet your team strongly, and also you got to realize that the incentives aren't always aligned with the team that you have, and recommendations, are great, but, they might work great for some people and not for others. So it's going to be a really hard thing to find your team. If a bad agent's just going to try to sell you a property, a good agent's going to tell you not to buy a property, and that's hard to find.
I think the first thing to ask yourself is, do you want to do turnkey or not? Now, turnkey, if you're buying from turnkey, don't expect to be getting a discount. You're buying at market. You might even be buying slightly over market. At best, if you get a great one, maybe you're buying slightly under. But generally speaking, if you're buying from one of these operators who's a one-stop shop, they find the property for you, they manage it for you, they do the rehab, they do all that stuff. This is buying an index fund. If you do it, on the stock exchange, you're getting. Now you need to vet that team especially carefully, because it's not just one component. If they're bad, it's usually all the way around. So you start with an interview. We'll start with just checking their look at their website, make sure it's professional, look at their the various, the information packets they send you. Make sure that they are coherent and well reasoned, and all the rest of that stuff. Check their online reviews. Now, a lot of management companies get bad reviews from residents who, good people who are happy that their house is fine and there aren't maintenance problems or whatever. They rarely write reviews, but the ones that go sideways do. But if it's 1 star, 1.5 star, just garbage. I mean, that tells you a lot. Go look, Google them. Look and see if there are reviews of this person. I knew one turnkey operator who was fairly sketchy, and just a Google search found endless people talking about them, him taking their money and just not doing anything. I mean, this one was awful. Somebody came by our office asking, if I knew where this person was, and because he had sent them the rehab money to do 2 separate rehabs. And, several months later, nothing had happened. He hadn't heard anything. So he flew out here. Nothing had even started on those 2 houses. And that money was just gone. And so it's like, this is the kind of thing that can happen. He asked me whether we managed. And I was like, no, we only managed for ourselves. And that was difficult to tell this guy because he's just heartbroken. So, yeah, but a Google search just on this guy who found all sorts of different, who's not in business anymore. So that's fine. But, found all sorts of people saying like, yeah, he just took my money, did all this stuff. Like, okay, that's a good sign. This is probably not the one that you wanna go with. It's like that's the first step. Making sure they have good marketing materials, good website, checking their online references.
Make sure they know what they're doing, and don't listen to marketing material or stated returns or things like that. Take a smaller return from a turnkey company, but a more stable, successful company. I would say, if they advertise a, 8% return on your money, take that over a sketchier company that advertises
in the same way you
return.
need to comp the property yourself, not rely on their valuation. You need to do a search for rents. You can do that on like Rent-A-Meter or better on like Rent Range, or just check Truly or Zillow for nearby rent comps. Make sure that their rent, their price, all that stuff is in the ballpark. Then at that point, I would just interview them. You ask like, what are your especially if you're looking for a turnkey company who's a manager, or just a property management company, because that's if you're doing this separately, piecemeal, you're finding a real estate agent, you're finding a contractor, you're finding a property manager. Regardless, you want to interview them. You want to ask about their process. You want to ask about how do they find residents? At what point? What is their screening material? Do they allow for evictions? Should be no. Do they allow for felonies? Should be no, or at least not recent ones. What kind of income ratio to the rent? It should be 3 to 1, unless you're in a very expensive city where it's more like 2.5, like Manhattan or something like that. You go through all these questions that you have. We'll have another video coming up on how to vet a property manager. We don't have enough time to go through that all here, but detailed interview. Make sure that they're not just throwing out it's not all just sunshine and lollipops. Make sure they're not just saying like we do everything perfect, we don't have any struggles. Make sure they know what they're talking about, and make sure they give the right answers. If they say we'll allow somebody in with an eviction after 1 year, that's the wrong answer.
Yeah, and another thing that a lot of people who like to do out of state, or they get a team, whether they do this in state or out of state, they feel like, okay, I have a property manager, I have a contract, I don't need to do this. When you do buy and hold real estate, you are never out of real estate. You have to manage the manager. You have to have ways to check up on your contractors, make sure that they're doing things correctly. Same with your property manager. You have to manage your team beyond finding the right people, and you have to know how to manage your team. You're never going to be out of that. If you own real estate, you're either going to be doing it yourself, or you have to, on some level, manage the people who are doing it for you.
I mean, contractors and rehab is another big one. There's if with turnkey companies or property managers, the thing that happens sometimes is basically kickbacks, where they'll give the contractor the deal, the job, but they get a kickback today. And that's probably not happening too much right now, since what contractor is out of work. But that you want to make sure that's one of the key things is that they will get multiple bids on any project of any size. That you can get your own contractor to bid it as well. That should be fine by them. You should also interview the contractors before they do their first job. Contractors often start well and then get worse, and you have to.
Well, okay. they don't always start well.
Okay, they usually start badly. Sometimes they start well and then they get bad. So you need to, keep a close eye on this. But, make sure that they're not, make sure that, interview them. And then also ask for references. I had one contractor who I asked for references from, and then I actually called them. And he came in the next day, he's like, you call my references, that's fine. I was perfectly fine. It's just nobody does that. Like no one's done that in like years. And it's like, really? We've had people at a property management company that we were looking at maybe managing a property for us who called the reference, and the guy's like, yeah, I had to fly in from Atlanta to help them figure out their accounting because there's such a train wreck. And I was like, they will tell you things. They will tell you things. So make sure to call the references. Once you've hired a property management company, you should also, or a turnkey company who does property management, you should also make sure you're getting consistent reports from them. You should be getting the number of new move-ins, number of people who are scheduled to move out, how much money has been received, how much money is outstanding, how many tenants haven't paid yet. All of those things should be at least monthly reports, and you should ask them any questions. If something seems off, utility bills seem high, a project hasn't started for a couple of weeks, push them on that. They're very good at giving excuses, but don't just settle for them. The squeaky wheel gets the grease.
Now, the thing a lot of people who want to invest out of state, what they're wondering is, where should I invest? And I think they're kind of talking the wrong question, because typically you're saying, what city, what state, what's the best place? And that matters. But there's so many variables to that. There's so many different things that, what's your goals? How far away is it? Do you have a team in place there? There's so many things there that it's really pick and choose what you think, where you think path of progress is, what kind of price points you want to hit. There's so many variables there. There's a lot of good places to go to. But really what matters is what the location inside of that city is, I would say.
I mean, I would definitely agree with that. I mean, there are some limitations on where to go. When we first came out to Kansas City, there were a bunch of investors from Australia coming out here and buying. And generally, I would say buying out of country is not the right place.
It's tough. And I would say maybe Alaska is a hard place to do out of state. I'm sure it's great, but that's probably hard. Hawaii
would be a place of why would you not just move in-state? But, a lot of cities, it is this thing about, like, there's the bad part of town and is not where you should be. And I think when you're investing out of state, I always like to think of it, you should invest in one area higher than you'd be willing to invest where you're at. Yeah. So if your minimum that you're willing to accept is a C minus, you should go for C. If it's a B minus, you should go for B at a minimum. So those are always a bit subjective, but what is your judgment of the area, the worst area you would accept in your city?
Because more things can go wrong.
A step up from there.
In worse areas, and you're not there to fix it, so you need to have a more secure. You're going to get a worse overall deal in a sense if you're doing it out of state. You have less competitive advantages. You have less ability to take care of things that go wrong. So you need a safer asset, and safer assets usually don't do as well. It doesn't mean it's not a good idea. If your goals can't be met where you are, then invest out of state. But it is harder. You have less competitive advantages, and it's just the reality of the situation.
I mean, and you can just check simple things like citydata.com is a great site for finding just the basic information about specific spots. There's all sorts of resources online, for prices, Zillow and Trulia, the MLS, if you're a real estate agent, rents there too. Rent Range is great for that. There's all sorts of different reports about cities you can get from Block Real Estate or Marcus and Millichap or Bigger Pockets. But I think one of the best things is just pick a date to go and visit the city that the real estate association is meeting. Go there and ask people about different areas. Go on Bigger Pockets forums. Which areas are you a fan of, and which areas are you not? Which areas have higher crime? Which areas are higher growth? Which ones just make for good rentals? Get that feedback from people at Bigger Pockets. Go to the RIA group and talk to them. And there's also usually a lot of other meetups and groups like that. And it's best to go to a couple of them. Talk to a few real estate agents. Talk to a few contractors. Just ask a lot of people. And then, of course, when you're in that neighborhood, ask the people who live there. I will say this. Google Street View is great, but it makes things look nicer than they are. The trash going across the street, the smells, it looks even like the War Zone and Skid Row, the intersection of there, it looks okay. So it's a lot better being there and talking to people on the ground.
Yeah, and nothing will ever beat intimate knowledge of a city and knowing block by block, but not really going to be able to get that doing it out of state very easily. But it doesn't mean you can't borrow that knowledge from other people. If you have, I mean, maybe the place you decide to invest in out of state is a place you used to live, or a place one of your friends happens to live, and that's why you go to that market, because you can borrow knowledge from somebody else, and you can get closer to a normal competitive advantage with someone who's lived there their whole life. So, you know, maybe that's the reason you go to a specific market.
I would, especially in the early going, recommend visiting from time to time.
Yes.
Going there before you buy for sure. But even after you have a property or a few, you know, going there, checking in with your property manager, or if you're using a turnkey company, checking in with them, looking at the properties, if it's an apartment or a vacant property, getting a view of it, making sure that they are getting the work done, that they're keeping it up decently, and all the rest of those sorts of things. So, and you know, preferably going to the RIA group and getting a little bit more information about that city. So I think if you can, you can kind of play off of both the knowledge of other people, both by online real estate investing communities like Bigger Pockets, and also the groups that meet and the people who are on the ground in those cities. Technology is great, but I wouldn't rely on it exclusively, especially for an investment as big and as important as buying a house or an apartment complex.
And if you're doing it out of state and you're not willing to take a slightly less return, still having to manage people out of state, not knowing as intimately the investment or the area, it's probably something you shouldn't get into and doing out of state. It's not something I ever recommend people get into. I completely understand why some people do, and you want to get in real estate, and your goals can't be met in your location.
I can also understand. I don't live in Manhattan, and if I did, I probably would be a little bit more optimistic about out of state investing for cash flow, because it ain't gonna happen down there. So, but I would say it is one thing you need to be very careful with. It's not. You should not see this as a passive type of thing. It needs to be a more active. I think real estate is great, but real estate is very hard to be completely passive in. And this is
unless you invest in a REIT, it's just not going to happen.
Yeah, you need a little bit, even a syndication. If you're a passive investor, there's a little bit. You need to push the operator there, and there's definitely that with out of state investing. What doesn't require being active, what you can be passive in and still get huge gains from, is subscribing to our channel.
I mean, you can do that in any state that you're in. No matter what state you're in, you can do it.
Countries too.
Yeah.
Conceivably planets. I mean, I don't
know. That little
why.
Red button is the best button to press. It says subscribe on it.
Is there any reason a Martian couldn't subscribe?
I don't think they have the internet on Mars right now, but Elon Musk has the internet. He is a Martian.
Once he gets there with Doge 1.
Also, hit that blue thumbs up button. That's another button that will be awesome to press for everybody.
Share
any
it,
state.
like it, all that good stuff.
Send it on MySpace.
And we'll see you next time. Thanks, guys.